Hello YouTubers, so we'll just do a quick roundup of the portfolio today. As you'll see, not an awful lot has happened since last week. We've got a slight increase, 5.36%. I think that's pretty much the same as last week. The portfolio as an overall has been pretty level this week. Nothing really exciting has happened. It's kind of all stabilised, if I'm honest. The pie itself, 6.9%. And then the overall portfolio, pretty much stable in terms of fluctuations. You'll see through here, everything seems to be pretty much in the green, bar a few handful of property stocks even, which are in the red. One of the main ones that's in the red is Churchill Capital, which is merging with Lucid Motors. That's obviously what they call a SPAC, a special application purchase vehicle. So basically it's a company set up in order to purchase another company, and then obviously they're all merged together at some point. I believe that's going to be around about May time. So as you can see, just before the merger was announced, it rocketed up to 56. I got in myself around here, around about the kind of $25. It has gone up, it has gone down since then, so may look to purchase some more in there. I've currently got about £500 cash in the ISA ready for deployment this week, so we'll see how that goes. I'm looking to possibly dollar cost average in there, or possibly dollar cost average into some of NEO, because I'm down considerably on that, and at the moment it's on a considerable sale. As you see, I've purchased it as an average price around 49, currently trading at 36. So we'll see how the market opens later today, and then possibly put some further funds into that. So I just thought today we'd touch on some of the other bits of my portfolio. So we'll nip on over to Binance. So here we are at Binance. So this is currently my cryptocurrency portfolio. You see it's relatively small. I think it's around about £60 in here. Might be slightly less. Maybe someone could tell me in Binance, especially on the app, where you can see possibly your returns against what you purchase things for, or is that not available on this app? I know with ones like eToro you can see what your return is, but I don't know anywhere, or I haven't found anywhere with Binance that you can see that. So you can see here, I've currently got 270 Dogecoin, Cardano, I've got 15, and Bitcoin I've got 0.00333. So I think, yeah, it was around about 50-60 quid I put in there. Obviously you can see the Dogecoin's done extremely well of late, and the other two are probably marginally down, if not the same. Hence why I would like to see if there's anywhere within this app that you can actually look at your your returns, but I can't seem to find anywhere. Even if you click on the Dogecoin here, it just gives you kind of your average thing. So and then more information about Dogecoin. So anyway, so there's that one. And then the other area that I have investments in is with Vanguard. So we'll just chop on over to them. So here we are in Vanguard. I don't actually go into Vanguard an awful lot because this is kind of feels a bit like cash savings, although they're not quite cash savings because obviously they are invested in the stock market. As you'll see here, I've got a pension of around about £220. We'll come back to that in a minute. And then an ISA. Within the ISA, I've got three main ETFs. So I've got emerging markets, ticker symbol VFEM. And then I've got developed Asia Pacific, excluding Japan, ticker symbol VAPX. And then I've got the good old S&P 500. As you can see, reasonably healthy returns on those, giving a net change of £352.20p. This 246 cash is waiting to be deployed into the S&P 500. That's just a regular thing that I put in there. So if we go to overview, you'll see in here that it's given you a net return total gain loss of 794. Now, I actually had a considerably larger sum of money in the ISA previously, but I withdrew it to purchase a property back in October. So obviously that in itself is probably skewing the figure. So you can see here we're about £23,000, and then obviously I drew lion's share of it out right down to this small amount that we've got in here now, or smaller amount, and then I've just been sort of pumping money into that. So the overall return's 9.53%, but I think that's slightly skewed because obviously back here I would have had considerably more return. And this little dip here is the just after this February was the coronavirus thing. Obviously these graphs are a bit skewed because that would have gone considerably down, but I put more money in whilst things were effectively on sale. So hope that gives you a good overview of the sort of ISA and savings. So if I go back to the main screen, you'll see I mentioned here about the pension. So I actually have a normal pension which I pay into with St James's Place. Now I know that's like a swear word to a lot of people because they're not particularly cheap to manage the money, but for me personally, the one-on-one interaction that I had with my pension fund manager was invaluable at the time, because it allowed me to understand the tax benefits of running a pension through my company and what I could do with the money, and it allowed me to select funds and keep things relatively simple at a stage where I didn't probably really truly understand what I was doing. Now, I know Vanguard kind of do that anyway now with these kind of robo funds and things, but the pension comes out of my company account, goes into them, and they manage the fund. And yes, they do get paid a reasonably hefty fee. It's about 0.5% in comparison to, say, Vanguard, which is like 0.07% for the S&P 500 in terms of management, and then it's free. Or capped anyway once you get up to, I think it's £250,000. So, yeah, so they charge about 0.5% as opposed to Vanguard that charge 0.07 when you take into consideration the S&P 500. Obviously, for me personally, it was about an education into the pension world and things like that. But I probably will change from them at some point. It's a little bit of a kind of learning journey for me, and I'm quite happy with the fees that I pay to them and the returns that they get me. They're broadly, after fees are deducted, they're broadly the same as what I'm achieving myself. So actually, in reality, the fees, I don't mind paying those, as I've said before, for the education, because I think the ability to ask questions and really investigate, like I've changed my the risk portfolio. I was probably medium risk with them, and I changed to a more adventurous portfolio, as they brand it, because I felt like the passage of time would benefit me, and we did an analysis of how well that had performed prior to the coronavirus and pandemic issues. So we made the decision, or I made the decision, because obviously it's my decision, to switch over to these things. So I hope you enjoyed the video. Please don't forget that these are only entertainment purposes. You shouldn't necessarily copy what I'm doing. You should only invest in the market if you feel comfortable, and you should take your own advice. I am just a guy on YouTube literally just recording his film, talking with a bit of a sore throat, so don't take my advice as golden and copy it by any means. So with that said, if you could smash the like button, don't forget to subscribe to the channel. Really does help us grow. We've got over to 100 now, so I'm going to at some point figure out how we do a bespoke URL to make people finding the channel a little easier. And with that said, have a super week. Hope the weather holds, and whilst you're there, don't forget to smash the like button, comment below, and subscribe. See ya.